How are you? How do we know each other?
No, I'm in the group, the Better Life Tribe.
Okay, nice.
Yeah, so I saw your post, and so it's my first time, unfortunately I don't know, and that's the reason I joined the Better Life Tribe. I don't know a lot of other real estate investors. So I'm just
Okay.
trying to expand my network and trying to get to know and become familiar with all the other real estate investors so I can be a little bit more confident in what I'm doing. When you're out there
Mhm.
on your own, you kind of like, do I pull the trigger? And you kind of hesitate a lot. So
Yeah, you can't do anything on your own.
yes, yes, yes.
Not
So
nothing
I'm
in
trying
life
to,
can you do on your own.
yeah. So I'm trying to expand my community of real
Yeah,
estate investors.
that's how I got started. Actually, I had a deal in front of me, and I knew it was a deal, and it was like, I mean, at the time it sounds silly, but at the time it was a big. It was I don't know, $56,000 for this house,
Right,
and I was like, I'm pretty sure this is a deal. Even though like everything was all house prices were low back then. But I was
right.
scared of it, and so I had a buddy, and I was like, "Hey, I think this is a deal." He's like, "That's a deal," and I was like, "I think I'm gonna buy it, but I'm scared." He's like, "You should buy it," and I was like, "Nah, I'm not gonna buy it. You buy it. I'll watch you." And so he bought it. It closed in like 5 days. He scooped it up right immediately, and he paid me like $1,000 finder's fee. And then I was like, "Shoot, that house is probably worth." That house, he rented it immediately. He made 200-300 bucks a month cash flow right immediately, and then that probably house is probably worth 200 grand now. And
Nice.
he had to do nothing to it. So
Yeah,
if
yeah,
I had to do that alone, I would have passed a lot. So having people around that you can be like, hey, is this a good idea? And they're like, yeah, you should do that. Is
yeah.
very helpful.
Good, good. So yeah, so that's what, I'm hoping to get out because I hesitate a lot, and I've lost a lot of good opportunities because I hesitate. So
Yeah,
and that's why I'm joining the Better Life Tribe just to kind of accountability one, hold me accountable, so I have a group of people that'll help me out as well, and then just forming the friendship and the relationships
sure.
is the second thing I hope to get out of that.
Yeah. I've been hesitant too many times in life, and then I've been too fast too many times in life. So it's like balance, finding
Yeah,
that
yeah,
balance,
yeah. No,
finding
I've
that
never been too
balance.
fast. I've never had the too fast problem.
Oh yeah. Well,
I'm a data analyst by profession, so I analyze to death, which is my problem.
yeah.
Yeah,
I hear you.
yeah,
Well, it can be overcome. It's not a curse. It's just I mean, there's a lot of people making money, so just
yeah.
analyze that's profitable and make a decision.
Exactly, exactly. Yeah, just to give you a little bit of background on myself. I, I've been working for the same company for about 20 years now, so I do have a full-time job. And my parents were into real estate a lot. They're no longer with us, but they believe strongly in real estate. And so I learned a little bit from them in that. And so when I was probably 21, I acquired I bought my first house, and I lived in one room and I rented out the other room. So if you want to call that my first house hack, it wasn't intentional, but that's what happened. And so so my company moved me out of state, and therefore I ended up just renting out the house. So that was my first deal. And then I got an opportunity to buy an apartment about probably about a mile from that house. And so I took that opportunity. It was a friend of mine actually, and I ended up he was moving, and I ended up buying from him. And so I was like, okay, so this happened probably within 3 years of each other, and I'm like, okay, so this is good. So, and then I started to look around for the houses, and then I started to get cautious, and I was like, I don't know, three houses, and I started to think, what if I lose my job, and the economy goes down, and then I have to responsible for play mortgage for three houses, and then that kind of put me to a halt because I just started to think about that. So I stopped. I didn't invest anymore, and I just kept those two houses. And
When was
then
that?
probably, huh?
When was that?
Oh, phew. The first house is 30 years ago, and the second one is like 25 years ago. So I have both of them. Both of them are fully paid off actually. Um, and so an opportunity came probably about 5 years, 2017, I believe. where a friend of mine's parents, he was moving his parents out, and he was just talking to me about it. That I moved my parents down to Miami, and they have a house in Altamonte Springs, so I'm gonna put it on the market. And I just said, well, how much are you selling it for? And he goes, oh, I'm selling for this, and I was like, do you want to do a deal with me? And no real estate agent, just me and you. So he said, yeah, sure. And so I finally I finally said, okay, Ingrid, you got to start. You've hesitated so long. So I ended up buying that house. So now I have three rental properties. And then I said, okay, let me start again. Let me start doing this and absolutely doing it. And then I got a hold of syndications, and I started to learn about syndications. So I was doing some research and came across syndications, and I was like, yeah, I was like the whole, becoming landlord or renting. I was like, I don't know if I can take on more houses. So this syndication sounds like a pretty good thing. I won't be, I won't be a landlord. I'd only max out. I have three places that I'm a landlord in. But if I could do syndication, so I did, and I invested in around five syndications since then. So in total of five syndications, and I wanted to do more, but then COVID hit, and then the interest rates thing hit, so none of the syndications are paying out, so that kind of halted me a bit. I had one that's still paying out. Everybody else has stopped their passive their payouts, and I was like, do I
Yeah.
continue putting money in it, knowing that there could be potential issues down the line? So that put me on pause. I was like, so now I'm like, okay, let me go back to real estate now. Let me go back to tangible things in my hands that I have control over, like purchasing real estate. And I know that's my property. I have control over it. I'm not, because, the only thing I hesitate about syndication is subscription. Are they, because you really don't know. They're collecting all this money, and you really don't know if it's oversubscribed. You really don't know. So then I said, okay, let me go back into real estate. And that's how I ended up here right now. Yeah.
Well, it doesn't sound like you have too much analysis paralysis. It sounds like you've been buying a bunch.
Well, yeah, yeah. But I hesitate on the problem is when I have to own the rental itself, because then I start to think about, okay, because I never want to own something that I can't afford to pay. If I have to pay 6 months of rent because there's a downturn into economy, I want to be able to do that. I never want to rely on just possibly having that thing rented full time. There's a possibility that the economy like 2020 happens, and you have people that are not going to pay you. So that's how I kind of think about it. I'm like, I gotta be able to hold all these units for 6 months. Fortunately for me, two is already paid off. I only have one now. But that's my only hesitation in buying these properties. So that's when my analysis comes in, because I look at it, the cash flow. I have to put this money in for roofing to replace the
How many?
roof. Da, 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 da.
How many? You've had properties for 30 years. How many roofs have you replaced?
Damn it! Don't ask that. None. Well, because
None.
one is a condo. The condo replaced the roof. So one is a condo unit.
What'd that cost you?
So uh, I mean, nothing, because it was in my association fees.
So, what are you scared of? You have enough life experience.
Yeah,
When was the last time you had a $20,000 bill?
never,
When was the last time you had an actual, not an eight, but an actual $10,000 bill for something? Never. I know the
never.
answer.
Don't. No.
So,
The only
so
time
if
I've
you,
really had
so
expenses when it's when. Go ahead. Sorry.
so if you left $10,000 per property in an account,
Yeah.
and then maybe if you were very conservative, you left, a year's worth of mortgage payments too, right?
Right.
So another $10,000, right? Which is probably way more than a year's worth of mortgage payments. If you left
Right.
$20,000 of or $30,000 sitting in an account for those two properties, or every property. Hey, every property I have, I'm gonna just sit on 15 grand,
Right.
and then you didn't think about it because you had it covered. You'd be way farther ahead.
Yeah.
But
You're
you're
right.
you're preparing for a risk that doesn't. It's not coming. I mean,
That's true.
if you've been doing this for 25, 30 years, I'm like, you haven't had a $10,000 bill yet. You went through the '08
Um,
collapse. You went through the 2020 COVID thing, and you're still. What is it that you're scared of that you think is coming?
I don't know. I don't know. Mentally, I'm just always. I can't. I don't know. To be honest, I don't know.
Yeah.
I'm just always
Well,
thinking. I'm
you don't have
always
to.
think.
Do you know
I
you
think
don't
like
have to listen
50
to
steps
your?
ahead.
No, 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 no. You're not. No, you're not thinking of 50. I'm so sorry. You're not thinking 50 steps ahead because in 50 steps, the risks that you're worried about still won't appear.
True, true, true.
You're thinking like doomsday.
Yeah,
You're
you,
thinking
you do
like
have a point.
you're thinking like only the worst possible. I have to be prepared for every possible scenario. But like, I mean, when has any risk? Again, you went through the '08 collapse, the biggest
Yeah,
financial collapse in your. It's not going to get worse than that in your life. Not likely.
yeah,
Maybe, but not
yeah,
likely. Right? And you survived.
yeah. And
And now you're
I
still
just
scared
feel
of some. Yeah.
I just feel lucky because I've never been affected. I've never I've never lost a tenant. I've been able to rent my apartment. I think I've had in the first apartment, the tenant was there for like 12 years, and it took me like a month to rent it again. So I've never had vacancy. Funny enough, yeah, I know I know, but I just feel lucky because I've never had vacancies. Even in 2020, they pay their rent. I never had an issue in rent with 2020. So I've never had these things that I fear of. So I just think of myself, okay, Ingrid, you're just lucky.
Okay. Well, you don't have to be lucky.
So
What if you
that's
just
how
sat
I
on
think of
30? What if you just sat on 30 grand? Like you're so worried
it.
about
You have a
risk that
point.
you're not able. You're like, I'm going to pass up the opportunity. You could make more money. I mean, by the time the
Yeah.
risk comes, you're
Yeah.
like, you have another rental. You could have another rental paid off.
You're no, you're right. See, that's why I need people like you around me
Yeah, we
because
got to get you on the offensive.
you're
You're playing only. You don't win a game by defense. You win a game by offense and defense.
no, I agreed. Agreed. Agreed.
Also, Ingrid, let me ask you a question. Do you know? I don't know
Yeah.
if you know this. Do you know that you don't have to listen to the voice inside of your head all the time? That's
It
like a.
served me well so far.
No, it hasn't. No, it hasn't. That's why you just said I'm calling Alex to get out of my own way. So, like, you
Yeah.
got a roommate. You got a we all of us. We have a roommate in our brains. We don't. He's not invited,
Yeah.
but he's there, and he won't go away.
Yeah.
But he is a unwanted. He is an uninvited guest. You don't have to listen to him.
Yeah. That is true. That is true.
Yeah, I mean, there's.
That
It's
is
good to be
really
risk.
true.
It's good to be risk averse. I'm very risk averse, but like, you're gonna risk all of your potential to make money out of fear of something that's like you've been waiting 30 years for this thing to happen and it hasn't happened. It's like it's my uncle's this way. It's like, he's just a doomsday predictor. He's like, the world's gonna end. I'm like, what do you if the world's gonna end, what do you care? Why are you preparing? Until then, like do you know that do you know how many billionaires have been built in the last 25 years?
A lot.
Right, a lot,
A
all of them.
lot.
Maybe not all of them, but
Yes.
like Amazon's
Yes.
25 years old.
Majority of them. Yeah. Yeah.
Amazon is 29 years. So when you were sitting here going, I'm going to worry about this, this bill, Amazon went through the dot-com bubble in 2001.
Yep.
And you know what I mean? Their stock dropped freaking 70, 80%. They lost a lot of money. I'm just saying, you're good at defense. We got to get you to play some offense.
Agreed. Agreed. No, you're
And
100% right. I could put some funds away and just kind of put that in a rainy day fund. You're right. I
and
didn't even
if you
think
did
about
five
that.
syndications, that's $250,000. You could have had a paid off house with $250,000. And then you'd have no risk
Ag-
and you have the
Yeah.
cash flow. So
No, agreed. You're 100% right. Yeah. Yeah. So thank you. You see exactly why I need people to kind of hold me accountable and put me in a better position because you're 100% right.
are you in a pod?
Yeah. I just joined a pod. Yeah.
All right. Yeah, make sure you get a good pod because if you meet with those folks every week, they won't let you. I mean, look, I'm particularly good at it, but they shouldn't let you talk yourself out of success
All right.
because, I mean, everything has downsides, but 30 years of waiting for some unbeknownst risk. That's worse. We gotta
It
get you
is.
placing offense. Yeah,
No, agreed 100%.
that's
That's
okay
what
though.
I'm
You haven't
doing
done
it.
nothing. You haven't done nothing. You've done a lot, so that's okay. And you got these houses, and now
Yeah.
you got equity, you got investments, you got cash flow. Like you got a
You're
job.
right.
Like you're in a prime position. So it's just a matter of taking a little bit more risk, getting comfortable with it, realizing, oh, this works.
Yeah. That sounds good. So what
I
what do
keep
you
t-
I
I
saw
keep
your company when I went to your website. What do you do?
same as you, single family and syndications.
I get us lost.
It glitches out
Oh,
sometimes.
you do syndications?
I do. I have a bunch of single family houses, and I have some syndication. Do you know that across my eight
Oh, okay.
or nine single family homes, I only keep about $20,000 in reserves total.
Okay.
I've
I,
never had a $10,000
I won't
bill.
go down. Yeah, I've never had one either. So yeah, 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 yeah. No, no, trust me, you've convinced me. I'm gonna open up that. I'm gonna do that. I'm gonna do that rainy day account. I might not. I'll go with you. I'll just do 10,000 per house because I can always take from one to the other if I need to.
Yeah, there you go.
Yeah, yeah, yeah,
I'm not saying to go risk free, but you're definitely doing too much risk mitigation.
yeah,
You can do less.
yeah.
Yeah.
No, no, agreed.
Yeah. Now look on
So thank you.
multifamily. When we bought our multifamily, the first one I bought, we didn't have enough cash, right? So the second time we bought
Yeah,
one, we ended up sticking like 10% of the deal just in cash, just sits in an account. So we had the opposite problem, right? I was too scared, and so we have this property. Um, it makes money, it cash flows, but we just sat on like $300,000. We just sat on it,
right,
and now that money sits in it. That money's going to treasury bills because it earns interest. But like I understand the risk of like not having enough cash, especially in these big properties. So
right.
that property runs really good, and we have reserves, but even the reserves work for us. But it's too much.
No,
Honestly,
agreed.
it's too much. I don't need $300,000. There's no point to it. Now it's a little bit different with syndication because everybody's still getting paid. So that money, it's like I don't need to pay it out extra because I don't need to. It doesn't matter.
Right,
But um, it's too much. It wouldn't. If I was sitting on 100 grand, I'm not gonna have $100,000 bill even on 52 units.
yeah,
The roofs are all replaced. The HVAC. I mean, what are you gonna do? There's no $50,000 bills. Never mind $100,000 bill. Never mind 300's crazy. So you know,
that's
yeah.
true.
But I understand. So I just want you to know, like, I understand
All
also,
right.
and you don't have to go one or the other. All risk or all scarce. There's a lot in between.
Yeah, no, no, I know it makes sense.
Um, but yeah, same as you. I bought a couple single family homes. I went slow because I was very worried about losing money and not being able to do it. And sure enough, it freaking worked. Rentals work. You buy them at a good price. Even if you don't buy them at a great price, if you just like wait,
All right.
you buy a house in '08, and then you're like, oh, well, that was a bad decision. And then next thing you know, in 2017, people are like, how'd you get so rich? I bought a house 9 years ago at the top of the market, and now that ain't the top anymore.
Yeah,
So, but I bought a bunch of houses in 2014, 15, 16, 17, 18, 19, that whole area.
you're right.
And, we bought them all. They were a little bit of cash flow, had a little bit of cash backup, just kind of skating by. And then next thing you know, rents go up, inflation comes, COVID happens, inflation goes up, rents go up. And those houses that used to rent for like $750 now I'll rent for 1,400.
Right, right.
So I was making $200, now I make 1,200.
Yeah. I know because I was never really invested. My thing was never cash flow because I had a job. So my thing was just, kind of putting me in a position. The idea for me was when I retired, and I wanted to retire earlier than I am, but when I retired, I would have cash flow. That was the whole idea is just build it, pay off mortgage, have the equity, and hopefully by then it would cash flow. So, but fortunately for me, all three are cash flowing very well now. So I know
I know it could have been 10.
it could have been 10, and that's what I'm kicking myself about because it could have been 10.
No, it still can be 10.
Yeah, so I know that's why I'm making the move now to get to 10.
Yeah,
My
you ain't
goal,
done. You're
no,
not
no,
even you're not done. So
yeah,
the next ones will be paid off in 30 years, and you'll still be walking around like,
I hope so.
yeah, no
I hope
doubt.
so.
Yeah, life is long.
Yep. All
Yeah.
right. I know this was supposed to be 15 minutes. I took more 5 more minutes. So thank you for taking the time and talking to me.
Uh,
Appreciate it.
was it only supposed to be 15 minutes? Wait, what is this for? Hang
Oh
on a
no,
second.
no, no, because your note said 15, so I thought you only had 15.
No, these are usually 30.
Oh, okay, okay, that's fine.
Yeah. Now I'm curious. Where
Okay.
did you see it? Where am I?
I thought it was the note you sent me. It's in my email. Oh, no, you said, oh, no, in 15 minutes. Okay, now I get it.
Oh,
You
I said
said
something
in
about my.
15
I said I was
minutes.
gonna be. I thought I was gonna be a little bit late, so I was like, hey, I'm gonna have to.
Okay.
Yeah.
Okay.
No, we got another 10 minutes.
Okay, good, good, good.
Yeah. Where do you live, Ingrid?
I'm Miami, Florida. Now, I'm back in Miami. That's where I'm originally from. So they moved me. I spent 10 years in the Bahamas. So, and I moved back to Miami in 21.
Okay. My fiance used to live
Yeah.
in the Bahamas.
And that's always where I lived almost 11 years actually.
She lived in Eleuthera.
Eleuthera, correct, is a different island.
Yeah, she lived there on and off for a couple of years.
Ah, yeah.
Yeah.
Yes. Yeah.
Um, are you coming to the Denver event?
No, unfortunately not because I booked a Europe trip. I'm going to Europe that week. So
What
I'm
part of Europe
like,
are you gonna do?
ah. Well, we're flying into UK and we're taking the train to Amsterdam and then from Amsterdam to we're flying to Paris. So it's like a
Good for
12-day
you.
trip. Yeah,
Good
yeah.
for you, bro. That's great.
Yeah, yeah. Yeah, so it should be a lot of fun. Yeah, unfortunately it fell right because I leave here like the 27th and I don't get back to like May 10th and I was like, "Oh, when I saw the dates I was like, ah, no, but hopefully the next one I'll go."
Yeah, we're gonna do more.
Yeah, I know. I know.
Good for you, dude. I've been to Europe a couple times. I really like Europe. I haven't been to Paris. I haven't been to France at
No.
all, and I
Oh,
haven't been to
believe it or not.
Amsterdam. But I've been to Spain and Germany and Portugal.
Yeah, yeah. Paris is not my favorite. I'm going because of the two people that I'm going. I travel with a group of about five of us. Two of the five of us have never been to Paris, so we decided, okay, we're going to go. But actually, anywhere in Italy is my favorite. I love Italy.
Yeah, I've not been to
So,
Italy, but yeah, I like going places that are a little bit less. You know what is funny? I've never heard anybody come back from Paris and be like, "That's the best." Everybody has a complaint
no,
about Paris.
no,
I
no.
guess it's just
Yeah,
it's too
yeah.
mainstream, too crowded, too
Yep.
touristy. It's like going to New York City. You're like, as a tourist, you're just like, "What are you doing?"
Yeah, yeah. And the people are not very friendly. They're not. But in
Yeah,
Italy, the people are awesome in Italy. It's one of my favorite
yeah.
places.
Spain, bro. I've been to Spain twice.
Yeah, yeah.
That's the
Spain, I like
nicest people.
Spain
Yeah,
too.
I'm like, these are great human beings right here. They're just excited that we're here. It's great.
Yeah, yeah,
Yeah.
yeah,
Well, good for you. That's great.
yeah. So, what are your thoughts on syndications, right? With everything that's going on with syndications.
I just raised my distributions.
Oh, you did? Oh, wow.
Yeah,
Oh, so
we're
you
paying.
so you own you actually run syndications.
Yeah, one.
Oh,
Uh,
one. Okay.
I'll tell you what happened. Okay, I buy a house in 2019, a 24 unit, and it went pretty badly. But the market just went so stupid that somebody bailed me out of it because they paid more than they should have.
Right.
But I learned a lot of lessons, and I got to pay my investors quite a bit. But I was lucky, 100% lucky.
Yeah.
But so then in 2020, I buy another property, 52 units. We syndicated it, 3.2 million. I raised 1.4 million. But I learned a lot of my
Nice.
lessons. I didn't want to get lucky. I wanted to run a business model, a business plan.
Right.
So we
Right.
just made a very concise business plan. We executed on that business plan. We still run it today. And, I think the biggest mistake that a lot of the syndicators made was they, human beings have this tendency to think of their experience as how life is, but there's a thing called history, right? And I don't know if you've ever heard this a phrase they use a lot. Is past is prologue.
Correct.
And so where I'm going with that is the interest rates were inevitably going to come up,
Yeah.
and the fact that it was a surprise to so many was so disappointing because it was, in my eyes, incredibly hilariously obvious. We had subsidized rates for like 15 years. It shouldn't even have lasted as long as it did.
It did.
Um,
Yeah. Yeah. I agree.
they tried to raise them in 2017, but people were so addicted that as soon as they raised them, everyone balked and they had to lower them again.
Well,
And then
yeah.
COVID, and so I was like, well, more so than I believed rates was going to come up was I thought it was irresponsible that rates would stay so low for so long, and I didn't want to have to find out.
Correct.
So I just said, hey, whatever we buy, we're going to buy it on 30-year or we're gonna buy it on a 10-year fixed rate, no balloons.
Right.
We're gonna buy it on a
Okay.
10-year
Wow.
loan,
Nice.
30-year amortization, and so we locked it in. So I have 7 more years before I have to think about a loan.
Right.
And I know a lot of other syndicators that ended up they're bigger than me. I'm a small guy, very small. Um,
Yeah.
so I know a lot of guys that were locking in 30-year fixed rate debt. So they're like,
Oh
we're
wow.
fine.
That's why
But
I
there's a
didn't
lot of people.
understand why they didn't lock in. Yeah.
I don't know either, and like I'm not part of those decisions. I sort of understand part of the problem with the business model. There's problems with the business model and and how they use acquisition fees, and it's it's a it's a systemic problem of that of it's a systemic problem. So some
Yeah.
guys were able to, you know, some guys got caught up. I think the variable rate loans really jammed people up, and
Yeah.
I just didn't. I to me that's the to me that was the lesson of 2008. The variable loans get you. So I
Correct.
just didn't make that. I just didn't do. I refused to do that. And then also the other thing I did, and look, this is a benefit. I'm not a big player, so like for me, I didn't have a staff. I wasn't living off of my acquisition fees. Like a lot of these folks are living off their acquisition fees. So for me, I was like, when the deal stopped making sense, I was like, I'm just not buying anything. And I think
Right.
some people were really trying to, jam deals through, and they are paying the price now. I mean, I don't know how much you pay attention to it, but it is
Yeah.
uh, it is it is getting bad out there.
No, no, no. I'm watching it pretty close because I said I have five. I have
You
five
got
weeks.
five,
I
and
have
they all
five.
paused.
Yeah.
Would you
Just
tell me who they
with the
are?
exception of one. With the exception of one, they all paused.
Would you would you would you tell me who they are?
Yeah. I don't. That's I don't
Actually, you know
mind.
what? I'll make you a deal, Ingrid.
Yeah.
I'll do it off the recording, and that way you don't have to do it
Okay.
in public.
Yes.
Yeah.
Yeah. Appreciate it.
Yeah. 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 I don't
Yeah.
want to. I don't.
Yeah.
I'm genuinely curious. I don't want to like. I'm not trying to be. I don't want to be gossipy. Yeah.
Yeah. Yeah. No. No. I get you. I get you. No. 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 No.
But it's
And
a.
again, go ahead.
It's definitely a systemic problem, and I think, um, that's just capital. Some people will learn from their mistakes and they'll get better. So it's not. It's not. I don't think the rates are gonna. I think it's very unlikely that the rates go up much higher.
Right.
So I think a lot of these folks that have paused distributions are, obviously on a case by case basis. I don't know, but I think a lot of them will be okay. Some of them are. I mean,
Yeah.
I'm watching. There's a guy on Twitter that posts all the foreclosures. Like some of them won't be. That's unfortunate, but a
Yeah.
lot of them will just
Yeah.
be. A lot of them are just gonna have a rough period and they'll be fine.
Yeah. I mean, the ones, I mean, it seems that I've been monitoring closely. I'm looking at the documents. If the documents saying what they're saying that they send me on a quarterly basis, I think they'll end up fine. I'm just not going to see any funds until they probably sell the property, which again I'm okay with. You know,
Yep.
yeah, because again, this was never income for me. This was always my plan towards retirement was sort of deal. So
Yeah, because you're so risk averse.
exactly, yeah, yeah. That's why I'll never quit my 9 to 5. I
Well,
that you know so yeah, that's not me.
I'm not telling you to quit. Don't worry.
No, no, no. I'm just saying that's what I'm not. People got not. Once you get because people are telling me you can do these syndications, they'll pay you monthly. No, I'm like, no, that's not me. I'm not that brave.
Yeah, they will sometimes.
Yeah, they will, but my goal is strictly retirement. That's all I'm looking towards. So it allows me not to panic when they don't pay out monthly, which is so I'm not panicking. I just want to make sure at least the hope I'm hoping at least I get my capital back. That's all I'm hoping at this point.
Yeah.
Yeah.
Nice. All right. I got a boogie. Hey, it was tremendous to meet you. I'm grateful that
Okay.
you shared.
No, thank you. No, thank you for talking to me. I appreciate it.
Do you come to the Tribe Talk? We do it once a week now.
Yeah, I think the next one I think is scheduled on the 14th, I believe,
Yeah,
if I
Friday.
have
Be
it
there.
correctly. Yeah, I've registered for that one.
Awesome. 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 All right. I'm going to end this. Hang tight. Don't go anywhere.